Start over. I'm still Brenda Cude, and I'm a professor in the Department of Housing and Consumer Economics, and I still want to tell you information that will change your life. Because knowing something about credit reports and credit scores is a part of everyday life now. There are all kinds of reasons why you need to know about this, even if you've never used credit. Your question is, well, what about me, right? So all of these things obviously have in common that all of these entities today base decisions about you and everyone else based in part or in total on your credit history. Landlords decide whether to rent to you or whether to require someone else to guarantee your lease based in part on your credit history. Utility companies decide how much deposit you have to pay, and I've heard lots of stories from students who could not establish a utility company account because they didn't have a credit history or they had a bad credit history. They had to find someone else that they could put the account in their name and be responsible for it. An estimated 60% of employers today say they check credit histories before they hire people, and your Facebook page, by the way. And some of them are saying they can ask you for your password. And they're saying, well, if I can't ask for your password, then I'll just make you access your Facebook page while you're in front of me. But 60% of employers in recent surveys say they look at credit reports. It's especially true if you're going to deal with finances or security, and like in security clearance kinds of things, sensitive information. But other employers say, even if that's not true, we're going to judge your character based on your credit report. We can look at your credit report and tell if you're going to be a responsible employee or not. Credit card companies, in fact, most of them don't look at your credit report. They look at your credit score, which I'll explain today, but it's a single number. That's all they care about. Is that number high enough for them to issue you a credit report? And it's based, or a credit card, and it's based on what's in your credit report. We would expect lenders to want to know what's in your credit report, and they make decisions about whether the product they have to offer is one they want to offer to you. If your credit is not good enough, then the lenders that are interested in you will be ones that want to charge you more. And finally, insurance companies now say that they use credit reports not to decide if you're going to pay their premiums, but they can decide whether you're going to file a claim or not based on what is in your credit report. So understanding your credit report is a key to understanding your access to lots of parts of our economy and things that you want to do going forward. So here's the bottom line. These are the things that I most want you to take away from today's class. If you've used credit in any form, it's likely you have a credit report. I have now seen people who have no credit accounts, and all that's on their credit report is collection actions. These are college students. I'll explain what that means in a minute. If you have a credit report, you have a credit score. Even if you've never seen it, it's out there. It exists. There are 3 private companies that prepare credit reports based on information that's supplied to them. This is not a government job. Because these are private companies, they may have different information. So seeing a credit report is not enough. See all 3 credit reports to know what others can learn about you.
Brenda,
yes.
You're saying that if a person, if any of these people here, if they've never used credit, they have a credit report?
If they've never used credit, they have no credit report.
They have no credit.
But what you don't know is if I have used credit in your name, in which case then you do have a credit report, even though you think you don't, because you have never used credit. I have a student this semester that I'm working with that has a collection action from a hospital in Connecticut that he's never been to. So someone used his name to commit what's called medical identity theft. And we're trying to figure out the solution to that problem. Large lenders, like credit card companies, only see credit scores. They don't really care about your credit report. They just care about that one number. So an instant credit check means they looked at your credit score and judged you based on that one number. The higher the credit score, the better. A lower credit score can cost you thousands of dollars in your lifetime in interest, in higher insurance premiums, maybe in lost income because you didn't get that job. So this is worth paying attention to. And by the end of the day, you will know that you can and should check your credit report because it's free. Just don't go to any website with the word free in it, because it's never free if the word free is in the website name. Your credit score is not part of your credit report, and it is not free except in some limited circumstances. So here's what I hope you'll learn. So let me now tell you more about this. And do ask questions as we go. I'm happy to answer your questions. If you want me to help you solve an individual problem, let me help you with that after class. But I'd be happy to do that as well. So lenders make decisions about us based on what's called the 5 C's of credit. This is what it traditionally was. So I grew up in a small town in Tennessee. The banker knew me, he knew my parents, he knew my grandparents. He could judge my character. He made this very subjective decision. But it was a small town in Tennessee, a small bank in Tennessee. He maybe made 5 loans a month. He could do this on a one-to-one basis. In the credit environment we have now, lenders still want to judge your character. Are you responsible? But they can't do it the same way my small town banker did. I'll tell you how they do it in a minute. As a lender, I want to know if you have the capacity to repay this loan. Do you have any money? As a lender, I want to know if you have any capital, another way that you show that you have resources to pay this loan. Something else you can do that will make me more likely to want to lend to you is to put up what's called collateral. So if it's a car loan, your car is the collateral. You don't pay, I come get your car. I sell your car, I get my money back. You don't pay your mortgage, I take your house. I sell your house, I get my money back. And I'm more likely to lend to you if there's some collateral like a house or a car than if the only collateral is the pizza you already ate. Not much market value for that, right? And then finally, what all of you need to know is that conditions, this should be economic conditions, but that it wouldn't be a C if I put an E in front of it. Economic conditions also affect this. So in one environment, you might be able to get a loan. In another environment, you might not. So let me quickly tell you a bit more about this because it helps you understand why credit reports and scores are important to lenders and how they use them. So in today's environment, when most lenders are looking at thousands of people, they can't individually evaluate your character. And even if they could, we'd sue them all the time because it would be too subjective. We would say, you didn't take enough time with me or whatever it is. So credit reports exist in part so that lenders have this common set of knowledge readily available to them that they can evaluate. But there's still a subjective element to that. You and I could each look at the same credit report and I might say, yep, give that person a loan, and you might say, no, I see this, I don't like this, I don't want to give this person a loan. So that's why these credit scoring models were created. It's an objective way to take all this information in your credit report, crunch a number, and say, here's that number. All of you can evaluate this person based on that. Well, that's kind of sad if your number's not good, and it's not good for reasons you think lenders ought to know about. I also worked with a student who's never had a credit card. Her parents used her name. She has a terrible credit score, but she's never used credit herself. So her people think she has poor character, when in fact she's great. Parents are kind of questionable, very questionable, I guess. But that doesn't reflect her and who she is. So if you ever fill out an application and all you're basically asked for is name, date of birth, social security number, and maybe address, it means they're only going to look at your credit score. They're just trying to match you to your credit record, and that's really all they're going to consider. If they ask you some other questions, like how long you've been at the same address or how long you've been in your same job, then maybe they're going to consider some other things that will tell them about your stability and your character. Capacity, Again, if I apply for a car loan or a mortgage, I might be asked about my income. That means the lender is going to make a decision about whether I can pay this loan from my income. But if I'm not asked for that information, they're not considering that. I have to decide, do I think I can repay this loan based on my income? We have lots of people who get loans, who get credit cards. Some of you have credit cards and you have no income. That was up to you to decide whether you could repay the use of a credit card with no income, because the lender didn't care in this circumstance. Maybe because you had a cosigner, maybe because they think they can charge enough in fees to collect what they need, all kinds of pricing models for this. This capital idea, again, relates to the idea of a down payment. If you come to me and you want to buy a car, and I say, can you make a down payment, and you say yes, I see you as a more responsible, reliable, more likely to repay the loan than someone who says, no, I can't do that. So that matters in some loans. This idea of collateral that I mentioned before, you secure the loan, so that helps me if my credit score is not as good, I can make a higher down payment, I can do something where I secure the loan and the lender will like me better, be more likely to loan to me. But I mentioned economic conditions. Right now is a tough time to get credit cards and to get loans. I just came from a class where we talked about mortgages. It's actually hard to get a mortgage these days. Even people who are well qualified, lenders are scared for a number of reasons, and they don't want to offer money. So the one thing I will say about this, if you're a graduating senior and your plan is to get a credit card after you graduate, you may find that nearly impossible. If you want a credit card, I would get a credit card while you're still a student, because it's more likely you'll qualify for a student credit card with a very low spending limit, but still it's a credit card. So if you see a credit card in your future, I would get it before rather than after you graduate. I worked with a student who graduated from the University of Georgia. He has a great job with an accounting firm. He could not get a credit card. He never had one, and he couldn't get one after he graduated. His wife finally had to co-sign for him, much to his embarrassment. He did not like that idea. She's the same age he is and makes way less money than he does, but she had a credit history. Yes?
So if you get one with a student rate, does that end when you graduate?
So the question is, if you get a credit card with a student rate, will they change that when you graduate? Depends on the credit card company. They may or may not. They won't cancel the card, though. Once they get you as a customer, they'll want to keep you as a customer, but they might change the terms. Most likely, it's the defining characteristic of a student credit card for me is maybe a $500 credit limit, which is not much. And they may not automatically increase that because you have graduated. Ideally, you now have an income to be used to repay, and they will increase your credit limit if you ask. But I think that depends a lot on the company itself. They may switch you to another card upon graduation. So how do lenders evaluate you? I mentioned that you fill out applications, and sometimes you put very little information on there, and sometimes, like to apply for a mortgage, you give them all your tax returns and your pay stubs and tell them more than anybody else knows about you. So that varies a lot. But the primary source of credit information is something that in the law is called consumer reporting agencies, but we all call them credit bureaus. So these credit reports that we talked about, and then credit bureaus also produce credit scores, and so do some other companies. So we'll look at these in more detail. So credit bureaus, let me just mention that there are some other consumer reporting agencies that we don't hear very much about. There actually is something called a Medical Information Bureau, where all of our medical records are getting collected for use by health insurance providers. There's another agency that collects all of your information about rental properties. So your landlord will check your credit report, but he or she may also check with an agency that maintains records about rentals and whether people walk away from their lease and pay on time and those kinds of things. So there's lots of different organizations that collect information about us. that are these generic consumer reporting agencies that exist. And we have rights to see our information in all of those as well. So credit bureaus. There are 3 credit bureaus. Equifax, some of you have been on Peachtree in Atlanta and have passed the Equifax building. That's where it is. TransUnion and Experian. These are all private, not-for-profit companies. So if I have a credit card with Citibank, Citibank decides whether to report my information to Equifax, TransUnion, and Experian. It's a private company. It can do what it wants to do. So if it doesn't want to report to all 3, it doesn't have to report to all 3. If it doesn't want to report every month, it doesn't have to report every month. So I have a student who had a car loan from a credit union that was on one of his credit reports but not the others. So that credit union just decided to only report to one. I'm good if the person who pulls my credit report pulls that one. I don't have as much of a history if they pull one of the other 2. So it's voluntary. It's up to them whether they report this information or not. In turn, then these same entities that report information go to the credit bureau and buy information. They buy the credit reports. They pay pennies for a credit report because they buy in such volume, but they buy the credit reports back then to get information about existing customers to decide whether to increase your credit limit, or potential new customers to decide whether to make loans to you or not. How many of you have seen your credit report? An estimated 4% of the U.S. population has actually seen their credit report, so you're above average probably. I don't know. I didn't figure out the math, but you're above average. The thing that surprises most people about their credit report is how incredibly detailed it is. It's not just you have 2 credit cards. It's a lot more detailed than that. There's a personal information section, which this is an example I pulled that has the person's name, social security number, age or date of birth, and then address information. So that when I have students look at credit reports, I say, make sure all of this is right. I don't worry that they don't have some address that you've lived at, but I would worry if they have an address where you've never lived. That might mean that something's getting mixed up in your record. Someone else's credit information might be in your record. I have students who have the wrong date of birth in their credit record. That's very disturbing too. Every credit report has pages at the end that you don't want to read, but you must read because it tells you how to dispute incorrect information. You just tell them it's wrong, and if they can't verify that it's correct, they have to correct it or remove it. So that's something you should do. A credit report also can have public record information. So if I've done something in court that's related to money, it's on file at the courthouse, and it can be in my credit report. So if I filed for bankruptcy, as this poor person did, this of course is a terrible credit report, all the details about the bankruptcy is there. This person got sued by someone, and a judgment resulted, and they owe Mr. whoever $2,500, and that's in the court records, and now that's on your credit report. And that's a very negative, both of these are very negative things to have on your credit report. That bankruptcy will be on there for 10 years. The judgment will be on there for 7 years. Even if you get it all satisfied, it can stay on there for that length of time. So for the next 7 to 10 years, these mistakes will follow me. Whenever somebody pulls my credit report, this is what they will see. If I mentioned before having a collection action, who knows what a collection agency does? Anybody ever work for one? What do they do?
I never worked for one, but they just send you like letters saying you owe money, and they try to give you a deal if you're going to pay right away, and they just have like different ways of like trying to handle it with you.
Okay.
Basically, they're contracted by another company to get
Right.
money from you.
So I'm a business of some kind. People owe me money. They don't want to pay me. This is not my thing. This is not what I do. So I hire you, the collection agency, to collect on all my accounts. And I might say the deal that I make with you is you keep 60% of everything you collect, and I get the other 40, or whatever it might be. And I'm willing to do that because I for me, this is still zero. I'm not going to get anything if I don't get someone after on these people. And they will call, they will email, they will telephone. I already said that. They'll send you a letter. They'll do whatever is within the law to collect money from you. I've had students with collection actions because they didn't return a library book. I have lots of students with collection actions because they went to the emergency room or they used an ambulance and they don't ever remember seeing the bill, but there was a bill and it was turned over to a collection agency. I've had students who had a dispute with a roommate and refused to pay that last utility bill because the roommate was supposed to pay it, but it was in her name, so it's on her credit report, and it will be for 7 years. Pay it. It's a lot better to pay the $35 than to have a 7-year bad history on your credit report. And as I said, for the first time ever, I've had students who have nothing on their credit reports except collection actions.
So, Brenda, so a person has never used credit,
Right.
but they've with the utility bill or some of the things that you just talked about, how did they even track? How's that? Then that's not really going to show up anywhere. Then, if they never used credit, they don't have a credit report, then these bad things that they may have made, mistakes they've made,
Right.
really aren't going to show up anywhere, are they?
Other than on your credit report. So
But
I went to the hospital, I said my name, my social security number, my date of birth, my address. They sent me a bill, I never got it, or I got it and I never paid it. So far it's not credit, but they turn it over to a collection agency, and now I have a debt. I owe a debt. And that collection agency reports to the credit bureau.
So then that starts the credit
So then that starts my credit report. I never had one before, but now I do, and the only thing on it is a collection action, and that is not good.
Okay.
You could guess that's not good. Yes, sir.
So if you've never had a credit card, the only thing that would be on a credit report would be bad stuff, basically.
If you've never used credit, the only potential thing on your credit report is either an identity thief's actions or negative actions. And there is one other possibility called inquiries, and I'll tell you about that in a minute. It means creditors have asked about you. That's another possibility.
Okay, so we only have those few hands go up here, so then it really, if any of you, and I think all of us have been in disputes before with folks about who owes what, and in things that you're not even involved with, someone may be using your name. So one of the assignments in this course should be
Check your credit report.
is they have to check your credit report.
I also had a student whose record showed he had a tax lien on a property outside of Savannah. He owns no property. So I teach about 150 to 200 students a year in a course where they are required to check their credit report, and I review every credit report, and if I could do it for every student at the University of Georgia, I would, because it's so important to know before the employer or the insurance company or the lender. You want to know before they see it, not after. Yes, ma'am.
I periodically sign up for a magazine subscription, and sometimes in my dad's name, just 'cause. Does that show up on your credit report? Because sometimes I'll click like bill me later.
Yeah.
I end up not paying it because I don't.
So her question is she subscribes to magazine subscriptions and she doesn't pay for them.
And then they always send me stuff like,
Right? Is that it? Is that basically it?
yeah.
So unless they turn it over to a collection agency, it's not going to show up on your credit report. If you say bill me later and they bill you and you don't pay, I mean technically do you get the magazines?
They stopped after a year.
So the answer is yes, you got a subscription and you didn't pay for it. So technically if that business considers that a debt and they want to report it to a collection agency, or report it to a credit bureau, that would be their option. Yes, ma'am.
I know you said identity theft. Does that reflect negatively on you if they discover that identity theft?
So if I look at a credit report and everything on there is something an identity thief did, if I'm the lender or the employer, I don't have any way of knowing that you didn't do that unless you have checked your credit report, declared it identity theft, and then there's a statement that gets added to your credit report to indicate that. But a lot of victims of identity theft have to carry something with them all the time to show to people who might look at their credit report to verify that the Brenda Cude who did that wasn't this Brenda Cude. It's very hard to prove you're not who you are. You know? So it's something that you have to get on top of, and you have to make the Federal Trade Commission has an affidavit that you can fill out that shows that, but you have to make it officially identity theft. You just can't say, oh, I didn't do that. You have to take steps to make sure others know you didn't do that. Yes, ma'am.
I recently have had some trouble with my insurance, and I'm not currently eligible to be insured for car insurance.
Mm-hmm.
Does that affect your credit report?
Her question is that she's not currently eligible to buy car insurance.
Yeah.
Would that affect her credit report? It would depend on whether it's a driving reason or a payment reason.
Right.
If it's a driving reason, it shouldn't be on your credit report. The only things on your credit report are credit. So I used credit or I created a debt in some way. That's what's on my credit report. So I have a list later of things that aren't on your credit report, like my bank account. Lots of things we do that make us look responsible or irresponsible, they're not on our credit report because they're not credit. Yes, sir.
I heard that if I check my credit report or credit score, I get my score lowered, or I pay some money to do that.
Great question. So the question is two things. One, I heard I have to pay to check my credit report. I have a slide later that tells you no. Every citizen of the U.S. by law has a right to check their credit report once a year from each of the 3 credit bureaus for free. And every resident of the state of Georgia has a right to 2 more times for free per year. So as a resident of Georgia, I could basically check my credit report all the time and never pay anything. My credit score is not in my credit report, and only in some very limited circumstances is it free. I almost always have to pay to buy my credit report. When we got the right to I have to pay to buy my credit score. When we got to the right for a free credit report, it hurt the revenue of the credit bureaus, so they started charging for credit scores and pushing that we all should want to pay for our credit scores. The first part of your question was, doesn't it hurt my credit to check my credit report? No, 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 no. Okay? Never does checking my own credit report have any negative effect on my credit history or my credit score. I can check that as many times, don't obsess about it, but I could technically check it as many times as I want to, and it has no negative effect on my own credit report. Yes?
If you apply for a credit card and get declined, does that affect it?
If I apply for a credit card and I'm declined, what happens is that it shows what's called a hard inquiry on my credit report, and the more hard inquiries I have, that's a negative for me. Whether I'm declined or accepted, it doesn't make any difference because it shows. So the fact that I was declined doesn't matter. It's the fact that I applied for credit that counts against me in a small way. Much more important is whether I make my payments and I make them on time. If I don't have any credit, all my credit's going to be new credit for a while. That's okay. It'll go away. I thought I saw another hand. Yes, sir.
So, you probably already said this, but your score is based off of your report.
Yeah, I'll show you more about a credit score here very, very soon. And what time do we finish?
4:45.
Okay, we're good. Okay, what else is in your credit report? Your use of credit. Hey, this is the logical part. Maybe not all the rest of it, but this is the part you could have figured out without me. In different categories. So most credit cards are what are called revolving accounts, revolving credit. It means that a lender says to me, I'm going to give you the use of $500. You use none of that or some of that, but you can't ever use more than $500. So if you use $100, you pay it back, you still have access to $500, and we don't have to start all over again. If I get an installment loan and I borrow $500, once I've repaid the $500, I have to go back and get another loan. I can't just keep using that $500 over and over again like I do with a credit card. And then mortgages are different separately in a separate category on a credit report. And this is important because another pretty small piece, but another piece of your credit score is lenders like to see a mix of credit. They like to see that you have not just credit cards, but you also have installment loans. And in this country, we think people ought to be homeowners, and so having a mortgage is a good thing. And at your age, you're not going to have a mix. You're just going to start out with some credit cards and maybe student loans and car loans. The perverse part of this is that getting all those loans might not be the best thing for you to do financially, but it'll help your credit score. So if that's really all you care about, you'll have a better credit score. But having a good credit score doesn't mean that you're able or ready to manage all that credit. It's just a lender's objective assessment of you. Credit scores don't take into account your age or your experience. So they don't know the difference between the person who's 21 and never done any of this and the person who's 41 and knows what they're doing when they get this credit. And I want you to see the kind of detail that is in your credit report about credit accounts. This is for a credit card. I chose this because I think this is what most of you will have. So if you look at this, there's an indication of who the account holder is. And there's different ways to have loans and credit cards. If it's mine, it's called an individual. If it's joint, that's my husband and I both have our names on this account. We're equally responsible. Or you and a parent both have your names on this account. We're equally responsible. Many of you are authorized users on a parent's card. So that means it's the parent's card and you're authorized to use it. An authorized user may never see the card, may never see the bill, may never use the card, but the account history for that card is on your credit report. So if you're 20 years old and your parents make you an authorized card on authorized user on a card they took out when you were 2 years old, you will have an 18-year credit history. It makes no sense to me, but that's the way it works. If they pay on time, then you inherit a good credit history. If they don't pay on time, that's not such a good thing to be an authorized user on their card. Your parents will be surprised if you're an authorized user on their card that they'll think you're seeing their credit history on your credit report, but it's now your credit history too. Yes?
So how long does it take to build up like a good credit score line, like 700 line?
So how long does it take to get a credit score of more than 700, which is a good score? First of all, you don't have a credit score until you've used credit for at least 6 months. And then I'll show you the formula, the way it's calculated, but it's all sort of artificial. So you can play games. So it's not a length of time. I've seen students with one credit card for 1 year who have 700 scores. I don't think that makes them great credit risk. It just means there's nothing negative on their credit report to pull their score down. Yes, sir?
So if one of our parents has really good credit, then should we just add our name?
So if one parent is responsible with credit and one isn't,
Well,
I would ask the responsible parent to be an authorized user on their card, and I would say Happy Mother's Day to Mom. So that's how I would handle that. Yes, ma'am.
So you said it takes 6 months to build the credit, so
If you have just taken out a credit card, she's asking how long it is until you have a credit report. If you don't have a credit report until you've had that credit for 6 months. So if you got a credit card in January, you won't have a credit, and that's all the credit you have, you won't have a credit report until June.
So what if I use the credit card, say I spent $500 on it or something, but I paid it off the next month, so I still wouldn't have it.
So all the things you did in the first 6 months may or may not show up on your credit report when it's established. Yes?
Okay, let's say if I have 2 credit cards and one of them I don't want to have anymore, so I want to cancel it. If I cancel that card, will it affect my credit score in any way? If I pay
Yes.
all my stuff off,
Right.
and I cancel it, will it
Right, so his question is, he has 2 credit cards, he has one he doesn't really want to keep anymore. If he canceled it, how would that affect his credit score, or would it? Well, it would. If that's the card you've had the longest, it will shorten your credit history. If that's the card with the highest credit limit, it will reduce the amount of available credit, which has another impact on your credit score. So for credit score management, don't cancel the card. For credit card management, if you can't keep up with it, cancel it and take the hit on your credit score. But there are two different things. Credit score, that they hate it when I say it's a game to play to increase your credit score, but it is. There's a way to play it as a game. But don't do it to sacrifice credit card management. If 2 cards is one too many for you to keep up with, cancel it. If you can manage 2, keep 2. Is there another hand over here? Okay. The detail that's on here. So, pays as agrees, that's what you want it to say, but it could say in default or it could say pays late. Also, I want you to see, here's one where it says pays 91 to 120 days. That's after the due date. That's not good. Also, here's the credit limit of your credit card is on this credit report. The most you ever charged on that card is on your credit report. And every single month is an indication of whether you paid on time or you paid late. Every single month. Not just the months you want them to see, but every month. The detail on a credit report is incredible. So if you think you've seen a credit report and you didn't see this kind of detail, you didn't see a credit report. You went to a website with the word free in it, they charged you for something that wasn't a credit report. So you must see this detail to know you've seen a credit report. Here is another example of something that's in credit reports even after you close your account. It stays in your credit report. So if you close off your card, it's going to stay in there. And this is an example of one where they did something called a charge-off. So this person owed, can't see the amount on this one, but usually it tells you, maybe it's the $2,600. They owed something on their credit card. They didn't pay. They turned it over to collections. They still didn't pay. Finally, the company said, oh, forget it. We're going to close this card. We're going to take the loss, but we're going to put it on your credit report where it will be for the next 7 years. So everybody who looks at this will see that this person owed them $2,600 and didn't pay it, and they finally gave up on them. Not exactly a mark in the category of responsible. So even though you close it, it doesn't go away. It stays on your credit report. Now, someone asked earlier about what if you apply for a credit card. Anything that you do where it generates an inquiry, in other words, someone looks at your credit report, that shows up on your credit report. So the examples here are a utility company and a lender made an inquiry because I applied to start service with the utility company because I applied for a loan. Those are called hard inquiries, and I see them on my credit report, but so does anybody else who accesses my credit report. But there may also be inquiries that I didn't do anything to make them happen. So let's say that credit card company X decides that they want to buy from Equifax the records of everyone who fits a certain profile. And they're going to review those and then extend credit offers to all those people who fit their category. That's what's typically abbreviated as PRM, a promotional inquiry. That's on my credit report and I see it, but no one else sees it, and it has no effect on my credit score. So all those times that different companies wanted to check me out for some reason, nobody else knows that but me. So that doesn't hurt anything. But if I make a lot of inquiries, let's say in the matter of a month I apply to 12 credit cards, a prospective lender will say, well, I know her financial situation today, but she's applied for 12 cards. I don't know what her financial situation will be tomorrow. So that's the reasoning behind that. As young adults, all of you who haven't used credit yet are going to have a lot of inquiries to start with. Just go slow. Apply one card at a time. Shop around. Know what you're doing before you apply so you don't generate a lot of extra inquiries. What's not in your credit report, as I said before, lots of things that, oops, probably need to move the screen. This is not good. Don't hibernate. All right, you're in charge. You figure it out. I have a hard copy so I can keep talking. All right, so what's not in your credit report? Lots of things that indicate financial responsibility. Having a savings account, not in your credit report. How you use your debit card is not in your credit report. Good for some of you, right? Right? Yes. Bouncing a check is not in your credit report. There's another system where it is. If I bounce a check, if I walk away from an account with a negative number, there's a system called checks, C-H-E-X, and a bank can check that and say, nope, we don't want you as a customer. So it's somewhere, but it's not in your credit report. If you get something called a secured credit card, that might or might not be in your credit report. If you get something called a prepaid credit card, like I go to Walgreens and buy one of those Visa cards, Visa credit cards there, and I go around and use that like a credit card. That's not in my credit report because it's not really credit, it's my money. I already gave them $50. They gave me a credit card with $50 on it. That's not really a credit report. So, ooh, he's a miracle worker. This is good. Student loans are in your credit report, and in both Equifax and Experian, it'll tell you the amount of your payment after you graduate. So it's useful to see that as well. Most of you have student loans that are deferred, which means you don't have to start making payments until after you leave school. So there's no payment history there, but lenders do take into account the amount of your student loan debt. And what we're reading now is that the amount of student loan debt has now outpaced credit card debt and car loan debt. And I just had an article about people 65 and older who are still paying on student loans, or not paying on student loans. So all of those things are there. And again, what's not in your credit report is any kind of judgment. It's just information. It's up to the user of the credit report to decide if you're a good or a bad risk. Your credit score is not in your credit report. Yes, ma'am?
So is there any perk to paying the bills off early?
So any reason, are you talking about student loans?
Yeah, or like credit card bills, like do they mark that? I know they tell you
Yeah.
if it's late, but would they
Okay.
feel like you pay early?
So you don't get any extra credit for paying early, but I'll show you in a minute how that can help you because it does reduce the amount of debt that shows up on your credit report, which is a positive. So repaying student loans before that you actually have to, or making some payments on them, is helpful in a different way in terms of reducing the amount of debt that you have at that point. And I see lots of students who have made some payments, even small ones, on student loans before they had to start. Not happening for me. So checking your credit report, which everyone must do. You have a right to that by law, as I mentioned before. The website to go to is annualcreditreport.com. Not free. I don't care how catchy the jingle was. Now it's been replaced by freecreditscore.com. But go to annualcreditreport.com. Despite the .com, it's a government-backed website. From there, then you go to credit report sites, but the credit reports know not to charge you because you came there from annualcreditreport.com. Just want to alert you, though, that you're going to be asked security questions. So, for example, one of those questions might be, with which of the following have you ever had a mortgage? And you're thinking, I've never had a mortgage. Well, one of the answer choices should be none of the above. With which of the following have you ever, which of these addresses is yours? They want to make sure that you are you, that someone else isn't accessing your credit report. It makes it confusing, but it keeps your information safer than if you could just go on and say, I'm me, show me my credit report. That's pretty important information that we want to keep. A lot of students think, well, I have to ask my parents for this in order to access my credit report. No. When they ask about the mortgage, the answer is none of the above unless you've had a mortgage. You don't need to ask your parents. In states other than Georgia, you may have a right to one additional freecreditreport.com or one free credit report, or you might have a right to one at a very low price. So if you're not a resident of Georgia, there are some state rights in other states, but everybody gets their one free a year from each of the 3 credit bureaus by federal law. Okay? So credit scores, talked a lot about those. Credit bureaus produce those. It's a single number. It's usually the information in your credit report. Sometimes they might add other information, but you have to get it separately. It's not in your credit report. Here's what goes into calculating the most common credit score. It's called a FICO score. It's an acronym for Fair Isaac Company. Specifically, your FICO score is designed to predict precisely one thing: the likelihood that you will be 90 days past due in the next 24 months. It's exactly what it was designed, the algorithm was written to predict how likely it is that you'll be 90 days past due, 90 days or more past due in the next 24 months. They put in a lot of data and came out with this idea that these 5 things are what predicts that. And these are the weights that they put on each of them. So your payment history is the most important influence on your credit score. Do you pay on time? That's what they want to know. Your amounts that you owe is another huge influence on your credit score. So that's where paying early reduces the amounts that you owe as reported to the credit bureau. So if I owe $500 and I pay that off 10 days before it's due, that goes to 0. And I'm more likely to see a 0 on my credit report as the amount that I owe than a $500. These 2 pieces are completely and totally within your control. Whether you pay on time and how much you owe, that's entirely up to you. The other 3 pieces, which are much smaller, are less in your control. You can't really make yourself older and increase the length of your credit history other than getting on a parent's card. It's the only way I know to make that happen. You can't really help it if a lot of the credit you have is new credit because you haven't used credit before. But that's a small piece of your credit score, so that's okay. And you cannot really, in the short term, have the variety of credit that a lender would like to see, but over time you will. But fortunately, these 3 things are the smallest influences, and you're in charge of the largest influences. So for payment history, they look at things like how often you're late, how long, like are you 30 days or 90 days or 60 days late, 120 days, and did you do this regularly or occasionally? So there's more detail to it than just did you pay on time or not. So they do consider, well, that was a long time ago, more recently you've been better about it. All those things are considered. Then the amount owed, they calculate something called the debt utilization ratio. And here's where you need to listen up, because if you max out your credit cards, it can have a negative effect on your credit score. It's kind of perverse. They gave me this credit. Don't they want me to use it? No, they really don't. Or if you do, they want you to pay it off as fast as you can. So if I had a $1,000 credit limit and I charged $100, I have a 10% debt utilization ratio. If I've charged the whole $1,000, I have a 100% debt utilization ratio. The ideal is less than 30%, and if I can keep it below 10, that's even better. But with a $500 credit limit, that's pretty hard to do. That's not using my card very much. Fortunately, this is aggregate, so that's why having 2 cards instead of 1 card, not using the second card, keep my charges the same, I'm using less of my available credit, improves my credit score. But that card I'm not using, I want to use it occasionally because they can actually just deactivate the card, cancel it, because they don't see me using it. Even if I repay in full, I generate revenue for the credit card company every time I use it, so they really don't like people who never use the card. The retailer pays the credit card company every time I use the card. So if I don't use it at all, I'm not generating any money for them and they don't like us. Yes?
If you have like a high ratio but you've never missed a payment, is that still a bad thing?
That's a different part. So remember we had two pieces. Never missed a payment is in blue. Amount owes in purple. So I do good on the 35 if I never missed a payment. I don't do so well on the 30% if I'm charging up to my limit. Yes, ma'am?
Does it reflect negatively on you if a card gets canceled because you're not using it?
So if your card is canceled because you're not using it, is that a negative reflection? The cancellation itself isn't, but it's going to shorten your credit history and reduce the amount of credit, so I've got to watch my charges more carefully because I'll increase my debt utilization ratio if I lose a card and its card limit, if it's canceled. Yes, sir?
So you probably wouldn't, if you already had like 3 cards that none of them you really used at all, if you applied to get a 4th, like they probably wouldn't want to.
So if you already have 3 cards, you don't really ever use them all, you apply to get a 4th, they might think you're the best customer ever. I don't understand the reasoning behind any of this. I just report it. So I don't, you gave me a card and I used it. Wouldn't that be a good thing? I paid it off in full every time? No, that's not a good thing. Paying off is good, but using the credit you gave me is not good. I guess I look desperate. I'm not sure why it is, but. Okay. So we already said on FICO, a good score is above 700. In fact, now probably more like 720 or 730 to be great. But again, if you have a 700 and above credit score, don't assume that means you're ready to use credit. You might not be. Just some objective number says you are, but if you have no income, no self-control, no management skills, none of that's in your credit report. So, and what many students tell me is that everything in their credit report is more a reflection of their parents than it is of them. Their parents have been paying the credit card bill. So it really doesn't say anything about the student as a prospective credit user. Here's just one example of a crappy credit score and a little less crappy credit score from 600 to 695. The difference in the interest rate can be from 8% to 15%. Over the 36-month car loan, that's $3,000 different. Multiply that by how many cars you're going to own in your life. Multiply that by mortgage and by 10 or more for dollar amounts. Thousands of dollars in your lifetime by having a worse credit score rather than a better credit score. See what's left. Okay, this is the handout that he gave you. So let me just ask if you have any questions.
And I didn't get it to them. Raise your hand if you didn't get this 2-page,
Yeah.
1 page, 2 slides on the page. Does everybody have one now?
Do you have any questions about these? We've talked about a lot of them because you asked such great questions. So we've covered many of them. Yes, ma'am?
If I bought a car and my mom co-signed, does that mean that's building my credit as well?
So her question is, if she has a car loan and her mother co-signed, then it would be considered a joint loan, and it would be in your credit report and her credit report. So the good payments or the bad payments will appear in both credit reports. So as long as your name is on it. Yes?
I heard that, like, let's say if you go buy a car, like Honda or Toyota, like, if you go to different places and, like, all of them check your credit report or credit score, I heard that it affects your credit score, like, it brings it down.
Okay. He said that he heard if you're shopping for a car and you go to 3 different places in the same day or in the same weekend, and they all check your credit report, it hurts your credit score. You need to quit talking to whoever it is you're talking to, because they don't know anything. There is in the law the assumption that when you're shopping for a car loan or a mortgage, you would check multiple sources. We want you to check multiple sources. So as long as those inquiries occur within, I think it's a 30-day period of time, they're treated as one inquiry. So you have some friends you can inform today because you've learned some things. The other, I'm sorry?
Parents.
Oh, it's your parents. The other thing I've heard is, okay, I won't pay my credit card this month, and then I'll pay it next month, and it'll show them I can learn my lesson. No, that's not true. They don't know anything about those numbers. They don't know what you bought. They don't know who paid for it. They don't know. All they see are numbers. And you paid it or you didn't. So they don't see learned a lesson in there. Yes, sir.
What were those hard inquiries you were talking about then that can or may affect?
Exactly what I was talking about with him. The question was about hard inquiries. So, but what would show up on my credit report if I went to 3 car dealers in the same day, I don't know exactly how it's listed, but it wouldn't show up as 3 different inquiries.
When does a hard inquiry hurt you?
A hard inquiry always hurts you in just that the gold-colored box. I'm sorry, just in the new credit. Yes, the gold-colored box. But if I have 5 credit cards I've applied to, that's 5 inquiries. But what we're saying is if I'm shopping for a car or I'm shopping for a mortgage, the assumption is that I would want to check multiple sources. So 5 car dealerships wouldn't count the same as 5 credit card applications. I'm probably not going to buy 5 cars. That's the assumption. Yes?
So if I have a $500 credit limit and I just use $100 a month,
Uh-huh.
would it be better if I paid it early, or is it just good to just pay it on the due date?
Okay, so if he has a $500 credit limit and he uses $100 a month, would it be better to pay it early? If I want to be sure that the balance shows up as 0 in my credit report, I want to pay it early. If I want to be sure that when someone looks at my credit report in 3 months and I have the best debt utilization ratio I can have, I don't want to use my credit cards at all. Because a credit report is a snapshot at a moment in time. I go out and do stuff tomorrow, what's on my credit report will change the next time that lender reports to it. I want them to take a picture of me on the day I look the best. And to the extent that I can manage what that day is by paying off my bills, my credit card bills, by not adding new charges, if I'm going to apply for a loan or apply for a job, I want to manage my credit report so it looks the best it can, just like I want to show up the best in an interview. So I want to manage my credit report in that same way. But I've had a FICO executive say, just tell them to pay it early, and then it'll show a 0 balance when they report to the credit bureau. I was aggravated. What do you mean pay early? Isn't it good enough to pay on time? But, oh well. Yes, ma'am.
Okay, so my question is, like, when you go to Macy's or Belk or whatever, they always ask you to apply for their credit card. Does that affect you the same as applying for, like, a Capital One credit card?
Okay. So her question is, when you go to the mall or even open your email and they want you to apply for a retail credit card, or you get a job at a retail store and they pretty much tell you you have to open a credit card. This drives me crazy, but students tell me this all the time. Yes, it counts the same. And in terms of the types of credit used, retail cards are kind of the bottom of the rung. So saying, well, but I also have a Macy's card doesn't make you look good to anybody, because the standards for opening retail cards are probably as low as they get. So, you know, it really doesn't help. And lots of people talk about lowering your credit score for 20% off on a pair of jeans. Is that something you're going to be proud of in 5 years when you can't get a good car loan because your credit score is not great? I will say I've seen a lot fewer retail cards on student credit reports recently. I don't know if that's because retailers are not pushing as hard or students are resisting more. I don't know. I can't know that, but I see fewer. Another hand? Anybody else? See if there's anything left. So did you have any questions about these items? So what I do here is talk about, here's what you need to do to improve your credit score, but you might not choose to do that if it makes it harder for you to manage your credit cards. You don't want to end up in debt that you didn't intend to have. And here is the very limited rights you have to a free credit score. That's generally not the case. So if you're turned down for a loan or charged a rate higher than the better rate, you have a right to a free credit score. And if you are so under two different laws, you might get a free credit score this way. But otherwise, it's an important source of revenue. And credit bureaus still make money all the time from people who buy credit reports because they don't know they have a right to a free one. They just don't make as much money as they used to. So here's what I hope you've learned. Any last questions? This is what I said I wanted you to learn. I hope you did. Yes, sir?
So if I don't have a credit report, obviously I won't have a credit score.
Right. So if you don't have a credit report, you don't have a credit score, and someone who wants to review a credit report will have to decide they can evaluate you in other ways. Like a mortgage company could say, all right, bring us all your pay stubs, your income tax returns, and we will consider you for a mortgage even though you have no credit report, but they have to be willing to do that. It's a lot easier to just buy your credit report and buy your credit score. Did you have one more question? Okay. I'll come back to you. Yes?
That HACE course, 32?
That HACE course, I teach that HACE course, HACE 3110. We still have about 20 seats for this fall. If you're interested, it's at 9:30 on Tuesday. And we do have a clinic on campus that provides financial counseling on a sliding scale, really cheap for students. Yes?
That course is only for seniors.
So you have to have 90 hours to get into the course, and it's offered every fall and spring. Yeah. It's because it's really, okay, you're graduating, here's what you need to know. It's not a course to manage your money while you're a student. It's a course to manage your money after you're out of school. So I hope to see all of you in that course. Did you have one more question?
Where can I apply to see my credit report? The three companies that you mentioned?
So if you want to see your free credit report, go to annualcreditreport.com and start there. Okay? Not anything with the word free in it. Are you signaling me or asking a question? Okay, he has a question.
What do you think about freezing your credit to avoid debt?
So by law in Georgia, in many states, you have a right to put a freeze on your credit report. What that means is that you can't even access your credit, nor can anyone else access your credit. The only way you can, once you freeze it, you get a PIN number, and you can thaw it with your PIN number. So I'm at the mall, I decide I do want a Macy's card, I have to thaw my credit, and then they can see my credit report, and then I freeze it back again. But you're at the mall, and you want to apply for a credit card like me, can't do it, because they can't see my credit report. You can't pretend to be me because you don't know the PIN number to thaw my credit report. So it is a good way to prevent identity theft. It's also a good way to slow yourself down in terms of having to think twice about opening more credit since you have to do one more thing to do it. The equivalent, if you already have a credit card, is to put it in a box of water and put it in the freezer. Takes you a little while to thaw it out. Yes, you can speed it up in the microwave, but it gives you some time to think about it. And you might fry your credit card in the microwave too.
I figured it out. It's up there. I was wondering how
Okay.
long it would take to thaw it.
Yeah, it's instant. Just like they can do instant credit checks, they can instantly thaw and freeze. No, yeah. Good question. Thank you. It allowed me to talk about the one slide I hadn't talked about. Anything else? You're great. I like your students.
They are very good.
Yes, thank you.